And we're live. Welcome, everyone. Welcome to the week that was. Robinhood's weekly market recap. It's Friday, September 26th. I'm your host, joined as always by Robinhood's Chief Investment Officer, Steph Guild. How are you doing today, Steph?
I'm good, thanks. And I noticed you said I'm your host, but what's your name?
I'm Bill Ruby. I'm Bill Ruby. I'm your host today, which is my most important role, but Bill Ruby is a good label to that. Hey,
and
everybody.
Obi's still out, but he's doing great.
Yes, thank you. Thank you. I'm filling in for Obi. Hey, everybody in the chat. Welcome. I see it's a pretty crowded chat today. Edsman Archery, Quantum Queso Dip. Good to see you guys. Thanks everyone for coming by. But let's get us kicked off. So don't forget to follow Steph on X and Instagram at Steph Guild NYC. We have got
There's a fake one, by the way, on Instagram. It's like Steph Guild Robinhood or something like that. Ignore it. It's not me.
Oh, an imposter.
Yeah, I keep reporting it. They keep telling me it's fine. I'm like, it's not fine. So,
who are you to decide that that's fine? Well, we've got a great show for you guys today. We're recapping what you need to know from this past week, including NVIDIA's investment in OpenAI, what that might mean for Chinese tech, and we're just days away from yet another potential government shutdown. And we'll wrap things up by looking ahead for next week's jobs report. Don't forget to subscribe to the channel to submit your questions in the YouTube chat. We'll answer them later in the show. But I think you guys all know this. First, we've got to set some ground rules before we get started. Today's content is provided for informational and educational purposes only. It does not constitute tax or investment advice and is not a recommendation for any security or strategy. All investments involve risk, including the possible loss of capital. Please consider your investment objectives and risks carefully before investing. Past performance does not guarantee future results. Lastly, this live stream is not an official customer support channel. If you have questions about your account, please reach out to our support teams from within the app. Okay, with that, Steph, the bell has rung, the week is done, and it's time to look back at the week that was. Are you ready?
yes, let's do it.
Okay, great. Starting with the major indices, we've got everything kind of flat. It started off a little rocky, but S&P down 20, NASDAQ down 122, Russell down 14. I thought this was interesting. VIX is now below 16 again. It spent most of the week and the end of last week, if you remember, above 16, and it's come down just at the end of the day here today to 1529. Kind of interesting.
Yeah,
maybe a little less
a dribbly week.
Yeah, maybe a little less fear after the rally back hard on Friday. But going over to the sectors, we've got energy leading the way, which probably due to a lot of the things we're going to be talking about today with AI infrastructure.
Utilities, demand for power, still there no matter what.
Yeah. And then utilities, of course, like you said, and on the laggard sides, we got consumer staples down 1.13 and materials down 1.75. So nothing too dramatic this week. In our top weight S&P, Amazon is down the biggest, down 5%, with Meta following just down 4.45%. On the winner side, Tesla up 3.36, and Apple, the big winner of the week, seems like they are getting some follow through maybe from their phone sales.
Yeah. Well, was it 2 weeks ago? I was like, yeah, it was when I get back from Vegas, right? I remember being like, oh, look at that line at the Apple store. Noted.
Yeah, I honestly thought that was a bit of the thing of the past. I guess they still have their loyal followers, and it's showing up.
I feel like there's a lot of Obi still had a 10. I feel like
I think I have a 12
like that.
Yeah.
And it's thinner. It's a lot thinner. That's a change.
And they have the cool new color. Yeah, there's good things about it, but
orange.
A little surprising to me. But I guess it is a cool thing. So we'll take it. Intel having a monster week up this week, up 20%. That's due to a deal with NVDA, and they did see a big pop off that. Teradyne up 12%, EA up 11.7%.
EA is maybe getting bought by PE, private equity firm, Silver Lake leading it.
Yeah, we were just talking about that before the show. Pretty surprising, and that came out of nowhere. That pretty much just happened, I think.
It's funny because there's been so much chatter on social about like the end of private equity and how they like, that no one wants to take the marks down. Everyone wants their capital back. It's interesting.
Yeah, but on the flip side, I feel like there's been so many large companies that aren't even interested in going public, which is wild.
No, that's true too. And then on the negative side, you see CarMax.
Oh,
disaster earnings.
Yeah, that was super surprised. I mean, I've heard there's problems with the used car industry. I'm also a little surprised that didn't show up at all in their direct competitor, Carvana. Like, Carvana seems unfazed by CarMax just having a terrible quarter.
Yeah, I think I'm trying to look. I thought I had written down some of the notes from it, but it was I think it was a very like specific. So I think they had pretty poor business.
Mm-hmm.
They also had to spend money to try to make their targets. So that obviously means their margins were down. And then also, I think they had to make bigger provisions because they have a lot of people who are sus on their loans. So it's sort of like a whammy there for CarMax. And then Kenvu, we know what's going on with that, with, don't take Tylenol.
Yeah, that was a surprise for everyone, I think. But
was it? I feel like it was rumored before that.
I mean, maybe I was out of the loop on this, but that was out of left field for me. I mean, you read into it, I guess it's discussion has been around for a while, like as far as like 2019, but it was news to me.
Yeah, I was on Yahoo Finance like the day it got announced, and I was like, they asked me about it, and I was like, listen, I'm not a doctor. I don't know. There's apparently arguments on both sides of this. The only thing I know is that like I paid attention to it because I, as a mom, like I had kids, I was pregnant, I took some Tylenol during that time, and I remember seeing a lot of class action lawsuits about like if you took Tylenol while you were pregnant,
really?
like join this class action lawsuit. If your kid has like ADHD. So I know like it's been kind of in the mix for a while. So I wasn't overly surprised to see this, but something I read, which I think is kind of interesting too, is that there a lot of the doctors that work for RFK were like wanted to focus on this other thing, which was a medication that was showing good signs for kids who have, who have issues, and but they decided to focus instead on Tylenol versus like this other thing that was actually showing good sign of like treating.
So it's like a treatment, not prevention, then?
Yeah, something that was, well, nothing to do with Tylenol, but they decided to focus on Tylenol in their announcement instead of like this other drug that was supposed to help. But anyway.
Interesting. Well, I am not smart enough to weigh in on that intelligibly anyway. But
anyway, did we look at bonds? I feel like we didn't look at bonds.
We did not look at bonds, unless they changed right at the end of the day too. They were, I mean, they did change. They came up a little bit. So the 5-year is up 8 basis points, 10-year up 5 basis points, and the 30-year up just 1. So up 2% in the 5-year. That's pretty interesting.
Yeah, I mean, rates up a little bit, and I think you saw that under the hood. I shouldn't use that word. Under the surface, there were, you saw kind of, at least today I noticed, and yesterday, like a lot of the stuff that's been working for the last month, like kind of sold off and vice versa. I feel like there's a little bit of a rotation, and some of it was the things that should do well in a lower rate environment that were, seemed to be unwinding this week. So, but then you also had some of them at like skepticism on AI. So I think that all also impacted the markets.
Yeah. I'm sorry. I just think it was so weird. I think almost all these numbers changed in the last like hour of the trading
kind of
day this week.
Rally into the close today for sure.
Very hard. Very interesting.
And leading up to that, like before that, I was kind of like, I saw something, I always talk about the concept of like this time period after like the Fed, but before earnings start, like it's this period where it's similar to like when your significant other goes away for the weekend with their friends and you don't hear back from them when you text them and your mind kind of wanders and it's usually not positive. That's how I feel like this time period is. And then I read something on FactSet that was like, the catalyst vacuum. And I'm like, oh yeah, that's maybe a better way to say it. Um, but the other thing the other thing that I feel like there's a couple things coming up that I'm still making me like a little bit cautious, at least at the S&P level, continue to be kind of sideways is, so apparently projected US pensions are projected to sell. Now remember, almost at a quarter end. And what happens at a quarter end? Rebalancing. So pensions are projected to sell $22 billion at the month end of equities, which I guess is the largest flow in recent years. Still doesn't sound like a lot of money to me in the grand scheme of things because the market's so big, but
Yeah.
I guess it's the 89th percentile of the past 3 years and 92nd percentile since 2000. They also said that, JP Morgan had like their market intelligence note that they put out on a daily basis. And in that it said, I quote, volumes are light. Some investors are waiting for a pickup in activity before making portfolio changes. But rebalancing moves usually take place over 2 to 3 days. So they were just saying that you could see some pressure over the next, couple of days as we get closer to the October 1st date. So that's kind of making me feel like we'll be a little mushy, but I don't think it's like a reason to kind of change your, you know,
Your
your
whole take.
investment theses. But there are some things that are coming up that may make you change your investment theses.
Yeah. And, coming into this week, I feel like there was a lot of concern. We're at all-time highs, and then there was like a break. If we take a look at the S&P chart, we've had a pretty beautiful trend up. In fact, let me put an extended line. I consider myself a little bit of a old school technical analyst here, so support and resistance levels are pretty big in my book, and this is a beautiful channel up. We came back. We haven't even really tested it. I think if you fudged with the lines a little bit, you could maybe say that we had tested it on a shorter term in this area, but even with this pullback, we haven't really tested the bottom of the range. It felt very sudden, but it sort of looks like business as usual. If I really had to, read the tea leaves, I think maybe you try and test that bottom line, but
Oh, you think, yeah.
it's
Okay. So what does that mean from a level perspective? Not that we're making recommendations here, but does that mean like level wise, 65?
well, we'd probably do it in the future. Yeah, 60, like, so
50?
2 or 3 days out, maybe 65, 60. If this is another support level that we tried, I think you could,
Yeah.
one could argue, excuse me, that you might be able to touch that down here in the 6509, 65 even area, 6500.
Yeah.
But while it looked pretty rough in the middle of the week, it came back pretty strong, particularly at the end of the day today. So I guess we'll have to wait.
No, it was kind of a surprise. I was like, did I miss a catalyst?
Yeah, me too. I thought this would be a pretty clean down week, but we ended up pretty
in the
flat.
chat, if there's a catalyst that I missed, let us know.
Yeah, I didn't see
But
much
I didn't look at social, so maybe there was something from our president or something. But there definitely were stories this week, right?
Yeah, tons of
There's
stories.
something coming up on the 30th.
Yes, one of the major stories looking ahead to next week will be funding for the federal government. Surprise, surprise. Lawmakers in Washington can't seem to agree on anything, and it looks like there's possibility of another government shutdown. What does this all mean, Steph?
Yeah, so Congress and White House are deadlocked. We've seen this movie before. This has happened several times. And I think the first time it was kind of a big deal. Like I remember 2011, it was sort of a big deal, but I don't know. I always say, actually, there's another thing I always say, which I don't know if I've said on this, but people can get used to anything. And I think that's sort of the case here, at least for now. The deadline is September 30th. Otherwise, the government's not going to be funded. And, Trump and the Democrats were supposed to meet, but they canceled it earlier in the week. There is a short-term continuing resolution, which is basically a kick the can down the road. Let's continue to fund ourselves. And that failed in the Senate. Democrats really want funding for Obamacare, subsidies, and reversal of Medicaid cuts. But Republicans are saying no. They're trying to just fill the funding gap and keep everything else out of it. I think the one thing the one thing that's rumored or true, not, yeah, I think it's true, is that this time the OMB director was instructing federal agencies to plan on permanently letting go of the people that would need to be furloughed. So basically, when the government doesn't have funding, it goes into like only necessary functions mode. And it usually furloughs employees that are not deemed absolutely necessary while they're kind of waiting to get funded. And the discussion is that they may just be permanently let go of in this. There's been some talk of like this isn't consistent with the president's priorities. This move, like some people have said that the move represents a significant escalation relative to past, fights. Schumer said that the firing threat is an attempt at intimidation that would probably be overturned in court. But, that takes a long, long time. So I think all in, like a temporary not funding of the government isn't that much for the market to bat an eyelash at. And maybe maybe there's probably some inside information about that I just don't know. And that's why maybe the markets came back a little bit. But the permanent layoff thing, I just feel like it just contributes to the concern around the job market, which is actually like government jobs has been the biggest detractor from the jobs data that we've been getting. So, and then it will obviously mean that like next week we're supposed to get jobs data, by the way. And if the government shut down, we're probably not going to get the data.
Yeah,
So
there goes
it'll just
that.
be, like lack of data for all of this stuff, which is not great. And obviously other regulatory functions like corporate filings, IPOs, all that stuff will probably have to be stopped because they have to be approved by the SEC, and then they'll go, they won't be functioning. So we'll see. But it does have a little bit more impact on the capital markets if you decide to fire all these people permanently.
Yeah, and a lot of deals being made. I feel like the ByteDance deal, is around the corner potentially for TikTok, and
bunch of things. Well, there's more too, right? There's like tariffs.
Yeah.
So Trump actually came out right last night and talking about tariffs. So there's like more stuff coming from the government that I think so that's going to be on trucking, housing products, furniture, some drugs, unless the pharmaceutical companies make just as much here. There was also some talk about more tariffs on semiconductors, unless they make, at least half of what they put out here. So we'll see. The only, I think, saving grace is that the EU will still have a 15% tariff on their pharma products, not this 100% that's being threatened. So, and then there's the court decisions on the tariffs that are in place, which is kind of looming. And I read an article, I think it was in the Washington Post, where hedge funds are buying tariff rebates because if they're proven to be illegal, then, obviously pending potentially further litigation or other things, the people will get rebates. Like the actual people who have to pay these tariffs get rebates. And, the hedge funds are apparently like buying them for 20 cents on the dollar, 30 cents on the dollar.
Interesting.
In anticipation of them potentially like being called illegal. I don't know. I don't think that's gonna happen. I don't know. I feel like the White House will figure out a way to keep them in place, and I think rates would go up a lot.
Yeah, I think they'll fight pretty hard. I mean, we've still got a few weeks till that, right? Isn't that 2 or 3 weeks out?
Yeah. But I think it's important to keep your
ear to the ground there, and the market will likely react before if it's leaning one way or the other.
Yeah.
But also a ton of tech news this week, Steph. One of the big announcements was NVIDIA's new $100 billion deal. Yes, $100 billion with OpenAI. Take us through that, the details on that one.
Yep. This is definitely bigger than the one with Intel. Intel, I think, was like $5 billion. So this is a $100 billion deal. NVIDIA becoming a strategic compute partner in OpenAI's next phase of their infrastructure build out. So OpenAI plans to deploy at least 10 gigawatts of NVIDIA powered systems. Guys, watch out for your electric bills because they're not going down anytime soon. and that's why I'm like, I got to go off the grid. I got to get solar.
Yeah, I know. Solar is really
Um,
10 gigawatts is like what New York uses, right? It's
it's,
massive.
it's we're anyway. So I'm like, are we gonna have water and power for ourselves or just for the bots? For the first one's gonna expect to be online in the second half of 2026. So about a year from now. Most of the investment's going to go toward leasing or purchasing NVIDIA chips. And this is the part that like, I was asked about this when I was on Yahoo Finance because it had just been announced. And I was like, I understand why there's skepticism because NVIDIA is like, here's money to buy my stuff.
Hmm.
Um, and that just feels weird. So that whole circularity, that's probably not the right way to say it.
Like circular accounting, maybe something like.
Yeah, I feel like it was like a circular. Anyway, I'm just gonna move on. That like NVIDIA, does get a non-controlling stake in OpenAI. It'll be interesting to see how tightly the two companies will be linked. Now and whether future chip pricing or shifts in demand could put some stress on their agreement. I do think it probably makes the chips more expensive if there's this like to $100 billion to buy their stuff means like the other customers that want to do it with their own money maybe have to get in line and it creates greater revenue for NVIDIA in the short term. But it's definitely it's a weird time, like nothing we've ever seen before in history.
Yeah, and those types of like circularity, whatever you want to call it, I feel like there's a lot of that happening in AI. I think Amazon has a similar deal with what's the not Perplexity? Oh gosh, one of the other AI. They have a similar deal with them. So
I think Broadcom had a similar thing with one of them. But what should we look at an NVIDIA chart?
yeah, we've got an NVIDIA chart here. It looks like we are dead bang center of the range. I think this obviously had a beautiful run. We are gonna have a hard time getting back up to 184 looks like, and 166 is the bottom end of our range. We're sitting on this 50-day moving average. This looks like a wait and see chart to me, where everyone's waiting to see what the next big move is. I don't feel like they reacted very much to this news today, whereas we saw a massive jump in a lot of other stocks that have had similar news. You had Oracle jump, you had Intel jump. Didn't really see much of that follow through today. So I guess maybe sideways movements is in our future. Well,
maybe, but speaking of not sideways movements,
yes, and that another interesting angle here is what it could mean for Chinese tech. They're pulling away from using NVIDIA chips. What's going on in China, Steph?
Well, they kind of can't use NVIDIA chips,
right?
But
they're not allowed, I guess.
Yeah, I mean, look, obviously it's still trying to be worked out between the two countries who don't really have like a true solidified deal. But China's, they are as a result of that. Like you always think about, do you know about there's a story of the cobras in India a long time ago.
I do not know
Well,
the story.
I always think about this story because I always think about like whenever you put a policy in place, there's always unintended consequences. And at this time, and this was a very long time ago in India, but the British showed up and they didn't like the cobra snakes. So they said, anybody who brings us a dead cobra snake, we will pay you. Guess what happened?
They were breeding snakes.
Cobra farms.
Yes.
To get paid, right? So like unintended consequences of like, your intentions don't necessarily match what ends up happening. And I do feel like that's happening a little bit here where, China's like, okay, look, like we don't get this. So maybe we're going to try to make our own. And, the US has restrictions on selling to China. And so a lot of them are trying to go like Alibaba and ByteDance and Tencent. They're all, they were told to cancel their existing orders and they're trying to make their own. And I think Huawei is even as part of this, which is not something you can invest in here. But it's definitely like I taking a bigger step back and there's a lot of people, I think this is maybe a little controversial to say, but I do feel like China tech is the one country that could give the US tech sector a run for its money. And it's certainly more reasonably valued. And so you've seen like companies like Baba take off. And, we had some China tech positioning or have some China tech positioning and strategies portfolios as well.
Yeah, I mean, I feel like they kind of missed a lot of the AI bump, and now they're getting a big old push from it. If we take a look at the chart here, it has had
Whoa.
like one of the more dramatic charts I've seen in recent days, and most of it's in the last month or so. It like started rallying at August 28th, up about 50% from that. If we go back to a year, it is up over 100% on the year. And now it's not necessarily, it's got a long way to go from its all-time highs, which I think are almost at the 400 level, maybe 350, no, 320, excuse me. But it does still have a long way to go, but that reduces upside resistance in a lot of people's minds. So maybe this could be one that runs a little bit further. It is facing a little resistance, I guess we'd say in the 182, which might be why we're seeing that little pullback here, but didn't break the uptrend. I think it'll be pretty interesting to watch there and see if this AI push goes into China as well. But now, one company that is bucking the trend in the Chinese is the Chinese tech giant Alibaba. We actually just looked at that.
Yeah, they're talking also about physical AI. They've got robotics going, autonomous systems for self-driving, all the things that are happening here. And so we'll see. Like I do think China's next leg of growth. Well, I think it's already here, but we'll kind of ride on this AI and cloud infrastructure, and they have some of the right companies there too.
Yeah. They've had tremendous growth. Maybe we'll see it in other places. I think, going back to our thoughts on NVIDIA, we didn't see a big bump on them. Maybe this news kind of prevented that. I think a lot of people were hopeful that NVIDIA would be able to do a lot of Chinese sales, and we didn't really see any big...
It was 13% of their revenue
before
it stopped, so...
Maybe that's why we had kind of a balancing, canceling of the two, good news versus bad news. But finally, Steph, we're talking about tech and chips. We got Micron earnings. What did you learn from their report this week?
I mean, they crushed numbers.
Yeah.
But their stock price actually fell instead of, which tells you, I think, how high expectations maybe were or are in general for the space. The EPS came in at $3.03. Estimates were $2.86. Revenue was up 46% year over year. Didn't matter.
Yeah.
Data center segment was, very high. And it continues to be a big driver of growth for them. The company forecasted Q1 revenue looking forward to $12.5 billion, which is higher than this past quarter, which is 11.3. And they expect all of this strength from the AI infrastructure demand, but the stock just, I think, even went down after a while.
Yeah, it was really close to what I think was their all-time highs. We'll look in a sec. And then it's come down. So their earnings were September 23rd in the afternoon. If we do go down to like a 1 or 20, let's take a look at the 20-minute. You'll see that it did have a big spike up. It was an $8 spike up. And then it just came back down. It's been kind of bleeding out for the rest of the week.
It had that spike before, I guess. So, yeah.
Yeah, exactly. It was sitting right next to its top, and I had forgotten this. This is all-time high. It was an all-time highs for this.
It already was going into the earnings report. That's why I think it didn't move very much post-earnings.
Right, or maybe they had already broken the all-time highs. Somehow 46% growth is a year-over-year growth is disappointing, and then it kind of tests that the support that comes from that old high, and which is kind of where it is right now. It did gap, so a little interesting. But coming up, we take your questions. Before that, in case you missed it, here are some of the top market headlines from the week. We're back in 30 seconds. All right, time for some Q&A. But before we get to our first question, tell us what you learned this week, everybody. Could be personal, financial. You know the drill. Throw it in the chat, and we'll take a look at it. But let's go to our first question here. Edsman, welcome again, Edsman. Edsman asks, what tends to happen to markets when this happens, government shutdown? Steph, I think you touched on this a little bit, but why don't you expand on that just a bit?
Yeah, I think each time that it's happened, I feel like there's no like trend. In 2011, that was like the biggest mark in my financial memory. But it was also, it happened at around the same time that I believe it was S&P downgraded the US for the first time from AAA rating to AA minus or plus, I should say. And it happened around that same time because the S&P, you know, readers looked at what was happening in government and said, like, they're they're in gridlock, and they're not doing anything, and this is not good for funding the government. So, interestingly, later, the people that made that decision were let go, but it stuck, and so the markets really took it as a hit because it was for the first time, I think people realized, like, oh, we've got a lot of debt, and now we're not making decisions, we're not funding ourselves, and we're getting at the end to the end of our rope. But since that time, we've had very brief periods of it, and nothing really happens. Basically, like, the government keeps operating, but only necessary functions. But as I said, the one difference here is that the Trump administration is saying that they want to not just furlough the people that would be temporarily not working, but permanently let them go. And that's kind of a bigger deal because then what happens to government function? I guess it's good for revenue, but it also feels like when you're in trillions of dollars of deficit, I don't know, like, how much do you save by letting go of those employees? I don't know. It feels like a drop in the bucket.
Yeah.
But maybe they're just in the mode of every little bit helps. So I think it's just not great headlines, but I think the market is also pretty much seeing through it.
Yeah, and on a side note, I mean, I don't know that I trust like the government to choose to cut the right people either. If that's the case, I guess we'll see.
My only concern is, like, some grandma who doesn't, like, something happens with their social security check and they can't reach a person to help them.
Yeah,
they
doesn't know
really
how to use the internet or anything. Yeah, that would be a
That's what I'm worried
nightmare.
about.
That's worst case scenario. Let's hope it doesn't come to that. But moving on to our next question. Question 2, Sheriff Mod asks, if we produce more of our own oil, will it offset the energy costs?
Yeah, I do. I actually think, like, this is one of the things that I think there was a focus on alternative energy for a long time in, presidential administrations, which is probably a good thing to think about for the long term because we want to have diversity in our energy sources. But it shouldn't come at the cost, I think. I mean, obviously thinking about our environment is important, but it's very costly to switch energy sources. And we do produce a lot of our own oil. We can be self-sufficient in that, including natural gas, particularly. And so I do think that can help us in the short term. And that's going to be the way that we can, provide the energy in the short term. In the long term, we have to really diversify. And I do think that includes nuclear energy. I saw in the chat those talking about small modular reactors, which also probably have to come into it. It does take a really long time to bring nuclear energy about, but I also think we need other types. Like, I do think we need solar. I do think we need, for the longer term, because at some point, like, the oil will run out. Like, the natural gas will run out. But for now, yes, I definitely think that. And if you want to make a play on something like this, I think you want to be diverse in players that have nuclear, players that have natural gas, players that have, oil. And the energy sector itself has not been, like, booming so much. So I do wonder if it's an interesting opportunity, but I don't really, I have to do more work on, like, the name specific.
Yeah, and Elon Musk has been pushing solar quite a bit. I think he posted, this was a while ago now, but he posted a chart that China's getting a ton of energy from solar. I think Europe has really embraced that modular nuclear model in a lot of areas, specifically France. So I think
Elon's also importing a nuclear power plant.
yes,
Yeah.
yes, and they also
For them
buy a
building.
lot of energy from outside Europe. So, I
Yeah.
mean, that's a very complicated debate, but I think I think you're right on the money there.
I think the complicated part too is like some of the producers of oil are
Yes, I
not our
agree.
favorite.
I agree, and that's where we'll leave that. But Edmund asks, what is a tariff rebate? Can we have them as consumers? I've you have to take this one. I don't really know anything about a tariff rebate except for what you just told me.
This is really, I mean, obviously this isn't something that's like very much used, but if these tariffs that were charged by, the suppliers, because what we've seen, right, and Powell actually talked about this, is that the companies are paying them, but they're not all passing them on to the consumer. So not that nothing's been passed on to the consumer, but there has been more stuck in the middle than there has been on to the consumer. And for the people who have paid them, if they're deemed illegal, technically speaking, they deserve their money back. And so I guess people are selling their claims. So you have to have an actual like proof that you paid a tariff, and then you can put your claim back on the government. And they've been selling them to hedge fund managers. There was an article in the Washington Post. You can Google it, I think, but or ChatGPT it. But I know
I don't.
I get it back too.
I don't know why. I know it's not the same, but I'm getting like weird credit default swap vibes on this. I mean, not that it'll be anywhere as tragic if it goes one way or the other as
No,
those, but
you know what vibes I'm getting for it? Because
mhm,
hedge funds historically have also, this always, I feel like it's like preying on the poor people. But if you were in like injury, if you
mhm.
were like, in an injury at work or something like that, and then, you go sue and you're like, you have an injury lawyer, there are hedge funds who invest in the claims of that. They like do
Ooh,
analysis to
yeah, that's
see like how
gross.
likely it is for you to win, and then they'll pay you a percentage of the total outcome and then take the difference if it actually ends up winning. So you get your money faster, but you get less of it. And it's like
Yeah.
the same thing.
Yeah, I remember the first time I heard about that. I think Peter Thiel was involved in a big one like 10 years ago. That was the first time I even thought of that. But yeah, it was interesting. Interesting. Clever ways to make money. Not always the most moral, but very
Yeah.
clever. Anyways, not that I'm the one to judge any of that. Who? What do I know?
It
Um,
doesn't feel right, but yeah.
yeah, that's a great way to put it. That's a great way. Okay. Well, that's going to be it for questions. Thanks for everyone's questions. I appreciate you guys chiming in, Edsman, emotions. Really appreciate the conversation. Let's go ahead and look at next week. We're gonna take a look at the week that's coming up. Starting with the economic data calendar, heavy jobs data next week. On Tuesday, we get JOLTS along with Chicago PMI and consumer confidence. On Wednesday, we get ADP non-farm employment change, S&P Global Manufacturing PMI, and ISM Manufacturing PMI. Then on Thursday, we'll get jobless claims. And on Wednesday, it's the non-farm payroll reports, and then S&P Global Services PMI and ISM Non-Manufacturing Services PMI. Steph, what are you keeping your eye on for the economic data radar?
If we get them,
If
they're
we get
definitely
them.
going to be the jobs data, JOLTS and the non-farm payrolls. Data has pointed to a cooling labor market. Jobs fell to pretty low expectations. I think it's something like expected like 23,000 jobs. And last, which no, is it 54,000 jobs? Sorry, last month was 23,000.
Mm-hmm.
And we're expected to have a 4.3% unemployment rate, which is the same as last month. Some people are starting to look at other measures of employment, especially if we don't get the data. So measures like, I think you can Google these, but like obviously ADP, which is comes out and sometimes is the same as our jobs data and sometimes not. Indeed,
Mm.
job postings can be watched, which I looked at more recently and they have dropped. But not, the claims data came in better than expected. So, we'll see. If we get the data, it'll be something to watch because if it comes in cooler, then it definitely provides support for the Fed to maybe go beyond risk management cuts.
Mm-hmm. Well, moving over to next week's earnings calendar, we've got a very light week as far as earnings go. We're coming to the end of the earnings season. On Monday, we have Carnival Cruise Lines. Tuesday, we'll get Nike and Lamb Weston. Then on Wednesday, we get reports from ConAgra Brands and Acuity Brands. And Steph, what are you keeping your eye on for these?
I mean, none of these are going to be market moving. I mean, Nike is something, I think it's
Yeah.
kind of interesting to watch just because, they are trying to turn themselves around. There is actually a pretty high year-over-year earnings growth expectation for this quarter, 146%
Oh, wow.
increase. But we're talking from low numbers. So,
Mm.
not everyone loves them. About a little more than half of the analysts on the street have a buy rating. So we'll see. But I definitely, I think there's a lot of like potential in the name, or in a company like Nike, but they've gone through it. Let's say that.
Yeah, they've been through a lot. I mean, if we take a look at this chart, um, you
Oh,
know,
it's right at the
yeah,
150, right?
right at the
Yeah.
150 right now. It's got this big gap. And, even before that, this was the tariff day. It didn't look like super promising going into that, didn't fully recover. A lot of times when you see this big gap and it looks like we're sort of steeping into it, there is a tendency of these charts to fill that gap and go all the way down. That being said, one of the big catalysts that can prevent that is often earnings, which I guess we'll take a look and see where that goes.
Yeah. I have
Well,
something I'm watching, but it's not going to be like market moving, I don't think.
yeah, it'll be interesting, but yeah, it's not gonna push the S&P or anything.
One other thing I just saw, someone asked about what's happening in the crypto market, and I was just like kind of looking and surveilling. And, um, I think for this week, like it seems to be to me like dribbling down the same way the stock market was until today or
Mm-hmm.
until this afternoon. I think to me, it's like a little bit of profit taking, in my opinion. But I did notice like Doge is not that I'm, definitely not like sitting here trying to make any sort of recommendations, but I do feel like besides the last week, like Doge is one of the few that's kind of still up for the last month, which is kind of interesting.
Yeah.
Um, and there was some, we have these digests that are starting to come out from AI, and it was saying there was a bunch of Doge buying, and I noticed it in our market activity this week. So, um, yeah, I see just some profit taking happening in the crypto market this week.
Yeah, it was big move. A lot of the altcoins had like 30% moves. I think it's coming back a little bit. It moved in true crypto fashion, quick and all of a sudden, but could be coming back a little bit. Like you said, it definitely slowed with the rest of the market. But I want to let everyone here know that we have a programming note for next week. So. Next week, we will be doing a very early start on Friday. We're going to be on before the opening bell at 9 a.m. Eastern, 8 a.m. Central Time.
We're
So,
just gonna try it
yeah,
before
we're going to
markets
give it a
open, just to
try, and it's going to be a good slot, a new
I don't
slot.
know, Edsman. The only thing I'm worried about is you being able to watch it because I think that's like really super late for you. But we would just want to try like a pre-market, kind of see what the day is going to do. If we get jobs that time, we could kind of talk about that, and just see like kind of maybe prep you for the day and talk about the week.
Yeah, it should be interesting. There'll be definitely be a different spin. I think there's a different energy to the market that time. It's
Yeah.
I think it should be interesting. We'll take a look. I feel like I've said interesting like 5 times today, so I'm gonna slow my roll on that. Interesting, very interesting. Okay, Steph. Well, we're in the home stretch. Don't forget, follow Steph at Steph Guild NYC on Instagram and X. Steph Guild NYC. No imposters.
No imposters. Not the one with Robinhood in the name.
Yes. And we're just about out of time. Before we get started with our weekend, what did you learn this week, Steph?
So, and this is like a big up to Edsman's wife, because I know she works as a middle school teacher. My daughter's in middle school, and I learned yesterday, because we had middle school curriculum night, that apparently, but she doesn't tell us this stuff. She talks about like what her friends are doing and like what new thing she needs, or she just says 6-7 to me. But and I'm like, I don't, okay. But she came in second place in her science project.
Whoa.
They had to build a boat out of like just some different things like wood and where they were given money, and each of the things cost money, so they had to get the right materials, like fake money, and then they had to build a boat, and she came in second place, 143 coins before it started to sink, and the winning team was 157, so they were kind of right behind. So I was like, good job.
Wow, that's huge. I love that.
The other thing I learned about is the word chop, and how like she's like, Mom, that's chopped. I'm like, oh, okay. That's bad, right?
Yeah, I am totally out of the lingo. I would have thought that was one of my favorite shows on the Food Network.
I was like, oh, like the salad place chopped? What did you learn this week, Bill?
Well, I'm gonna cheat a little bit. It's not so much something I learned, but it's something that I was reminded of. Like early in the week, I feel like we started to take this downward turn, and everyone got a little bit of panic in their eyes. And I'm reminded of the time, I saw a clip of Stanley Druckenmiller talking about when he was trying to short the .com bubble, and he knew it was going to come. He shorted it. It rallied like 200. I think he lost like $200 million. Don't quote me on the numbers. This is paraphrasing. But then he had lost all this money. He blew out his position.
And then because he was short and the market hadn't dropped yet.
Exactly. Yeah. It continued to rally all through this time period. Then at the top, he was like, I must have been wrong. I'm going to go long. And then
capitulated.
Yes, he capitulated and went the other way. So I think,
but that's that thing, right? The market can stay irrational for longer than you can stay solvent.
Exactly. Yeah. One of my trading mentors used to always say to me, the market will always go longer and further than you thought it would. And I think we might be in that area. So, we'll see where it goes. And there could be a lot going on in this AI thing before it's all said and done.
Big Bill statements.
Well, we'll see. We'll see. I'm not going to set my flag in yet, but we'll take it from there. But that's it for our show, everybody. Thank you so much for joining. Thank you, Steph. Thank you to all the lovely folks behind the scenes that make this possible. And remember, next week is an early show. We're doing an early show pre-market.
9 a.m. Eastern.
9 a.m. Eastern, 8 a.m. Central. For Steph Guild, I'm Bill Ruby. That was the week that was. See you next week. Thanks, everybody.